The Nigerian Naira, that's the Nigerian currency, the Naira, have become a shadow of itself. Yes, nosediving exponentially since the pronouncement by the Central Bank of Nigeria banning the sale of Forex to Bureau-de-change operators, channeling demands from the unofficial markets. The sale of foreign exchange template faces a major test when it depreciated against the dollar at the parallel market at 540 Naira, the lowest rate ever traded at the segment. The Naira depreciation can be directly linked to the demand pressure for the dollar, which has heightened over time since supplier strength has reduced significantly. The CBN had in its last Monetary Policy Committee meeting said the ban of the sale of the foreign exchange to Bureau-de-change operators was necessary because most of them had become conduit for illicit Forex flows and graft. Now the next MPC meeting is due to hold next week. I think sometime this week, I guess. I think it's about 16th or 17th. Should there be a turnaround in this decision of the Central Bank of Nigeria as the Naira continues to depreciate? I have joining me to discuss this macroeconomic and public policy analyst, Professor Ken Ife, to take us through what this means and what we should expect moving on. Good afternoon, Professor Ife. It's good to see you, sir.
Oh, hi, good afternoon, and thank you for inviting me. Can they raise the volume a bit?
Okay, if you can hear me, Prof, but I can hear you clearly. As at now, the Naira trades at about 543 Naira, 540 Naira in some cases at the parallel market. Now, what do you make of this fall that we see on our currency?
No, the fall is inevitable. I mean, if you look at 2016, 2017, we've gone through this before. Is inevitable because the fundamental mismatch between the requests for Forex for import and the supply of Forex from our exports of crude combined with the remittance that you can see and all other sources of Forex, they haven't matched. So there is a greater demand for Forex than the supply available. And obviously, it's beyond our control because the major 80% of the Forex is coming from oil, and you can't control the production volume, you can't control the price. So, and then there's also misalignments on all sorts of other sources of Forex, like the diaspora remittance, which on theory should be about 26 billion, although it's coming down, but you don't have as much of it enter into the equation. And so many other hostages.
All right, it's a good way to start, Prof. Yes, I totally agree with you that, yes, that fall would happen. But are we now, the argument of demand and supply to allow a free market is on one side. But since we can't even bridge the supply gap, how can we now meet up the demand gap? Do you think opening up this market can help other than banning sales to the BDC operators?
No, you see, because of that fundamental misfit, then a managed float is inevitable. If you notice the importer-exporter window for many years, for 3 years, had been steady. Although now it's a bit more volatile, but it's nowhere near the volatility of the parallel market. So there is a degree of liberalization in that particular segment. But having said that, the option that we have under our control is Forex demand management, which some years ago, in 2017-16, the CBN delisted 43 items. But it was only delisting them from Forex eligibility, but it wasn't a case of banning them because they are still importing them. Except that they have to go and source their Forex from elsewhere. But also bear in mind that the recent increase is not unconnected with our huge trade deficit. There is a huge spike of import activity in the last few months. And God knows what they are importing with all these dollars that they are demanding. But there's a huge influx of imports, which has worsened our trade balance. And so the pressure is on. And don't forget again, as we are beginning to come close to election, dollar begins to play a stronger role in all of that equation.
All right, why I'm not holding brief for BDC operators, but I'm going to ask you this question. And many believe that the commercial banks might be overwhelmed with demands and maybe, delays and all of this. And many might still have to opt to looking for Forex from the parallel market. So they're saying that if you have bad eggs among the BDCs, why not identify them and rightful agencies take charge instead of outrightly taking them off the space? That's my question, Prof. And looking at the commercial banks, can they really handle this?
Well, if the commercial bank has capacity, but I guess that CBN is far more comfortable with them because they have systems that CBN monitors very, very effectively. If you complain to CBN about an infraction from a commercial bank, within an hour or two, CBN can establish the situation because they have the returns from the banks, and they have systems to enable them breathe down the neck of the commercial banks and establish the correct situation. But they can't do that with BDCs. They don't have any system of note with DBCs, and even if they're going to come back to BDCs in the future, they will have to deal with a system for monitoring and controlling the sales, and at the moment they don't seem to have that. And then they are not also going to exonerate these commercial banks from infractions. They're doing that all the time, we know, and that was the main reason why we had to bring in a third tier. But I guess the current situation is really out of hand, and CBN was pushed to take action.
Indeed. Do you also think in another way that maybe they should increase the allocation to the commercial banks? Maybe it will be able to go around better than what we have at the moment. Do you think there should be an increase?
Well, if you look at production volume has gone down now. It's even gone down to 1.2 million barrels a day.
Yes.
And then that normally with the large differential between the benchmark dollar rates, the benchmark rate for the crude. And the current price, high price of crude, we haven't actually seen that differential coming into the excess crude account and accreting to the foreign reserves and putting a CBN in the position to utilize some of those. And we know that if only we can remove this oil subsidy and oil importation, oil product importation, PMS importation, then the situation will improve significantly, because anywhere near 30% of our Forex is actually being consumed by that activity of having to import, export our crude, refine them, pay for it, all in dollars, bring them back, and those transportation costs have increased significantly. And then, of course, there's the margin that you have to allow to the importers. So the sooner we get over that, the better for everybody concerned. But the CBN has very little window on sources of revenue, Forex revenue.
Also,
and then, of course, that we are not having enough FDI, and then we are not having enough foreign portfolio investment.
Yeah.
That has been so volatile. Last year in March, they vanished. They vaporized away. Although they are beginning to come back a bit to seek improved dividend yield on some of the securities. And some are actually going to the company stocks and shares. But not as much.
A lot being done by the central bank to stabilize this market. You must agree with me, Prof. Even like you said, to attract foreign remittances and all of that, we have the Naira for dollar scheme that I think is still on at the moment. If you look at all of these initiatives, how well would you say they have helped us to shore up a little bit of revenue? Yes, our reserves still remain fair. At least what we have is not bad. But do you think it's really, are we reaping the benefits of all of this initiatives?
Well, I think I want to hope that the digital currency, the e-Naira, might help us a little bit in this direction, because first of all, there is a very high cost regime for international money transfer organizations. So we pay huge amounts. Sometimes it's up to 10% of our forex being imported, our remittances coming here. A lot of money is charged for that. And I've been involved in so many projects over 20 years ago in London trying to reduce the charges. And then upon the high charge, you still have them holding us to ransom because they get this money and then go and pay it to you in Naira and all of that. And so that's why last year you saw a huge drop from over $5 billion quarter to 3.3 billion dollar quarter. And then CBN stepped in. Now asking the IMTOs to pay this money into the domiciliary account of the diaspora, so that we can have the choice of whether we buy Naira from the bank or to this barrier market. We need to have the choice. It's our money. But it wasn't the case. So CBN now took further action to force the banks, commercial banks, to close the accounts, Naira accounts of the IMTOs, and then of course license more people. So, but CBN is doing what it can, but the shenanigans are still going on in that area. And then of course with cryptocurrencies coming in and digital currency likely to come in, people are having more options. The diaspora are beginning to have more options.
All right, thank you, Prof. Prof, let's also look at Naira, which you've talked about. It's very important to me. I was reading over the weekend, and do you think this is not another learning curve for us in Nigeria's monetary policy management? How easy do you see Nigeria keyed into this? October 1st is by the corner.
No, first of all, over 40% of Nigerians are not banked.
Yes.
So over 80 million people don't have bank accounts. And if you ask them why, they will tell you, oh, the bank is too far away, they have to travel, the risk of travel, all kinds of stories. With Naira, that doesn't exist anymore. They would go because people will have wallets and then have a card if they have to have a card, whatever. But they now have to have ways. They don't have to go to banks. Now, secondly, the bank deposit system will expand. So they now will have Naira deposit systems. They will have their current. So the base expands. And it's also easy to collect tax now. Because don't forget that when we do our transaction on our mobile phone, as the money goes, you see taxes coming in. You see the government have taken their own tax. So even though you are exempt from tax for until you're up to 25 million Naira turnover, but you're not going to say that to Naira movements where the money is deducted automatically. So that is going to be more revenue for the government. But also once you have more people in the net, then the monetary policy will be much more effective, because we know that transmission of monetary policy is always a challenge. When you consider that over half of our population, over 100 million people are poor, over 80 million are below poverty line, over 80 million have not got bank account. So when CBN sells money, sends securities through open market operation, then you start wondering, where is this money going to? The commercial banks may have them, yeah, but how are they lending it? Are they actually going into productivity, boosting productivity, or are they going into the spending side of our balance sheet? So, or are the banks taking this money and using it to buy treasury bills and so? So there are all those issues, But when you now have virtually most people are all in the financial system, then the monetary policy will be a little more effective, a bit more effective.
Now, Prof, I like to say that in recent times, CBN has stayed away from using that word devaluation, just like in the oil and gas industry, we say under recovery or shortfall, we don't want to say subsidy. I think that also applies to the financial space. Now, the next MPC meeting, do you think this will take center stage one way or the other?
I think, I still expect the MPC meeting to wait a little bit, because once you are introducing new things and there are so many balls in the air, you need to see, when you do a measure, you carry out a measure, you need to allow time to see how that measure goes, because we have a system here that, the monetary policy doesn't actually capture everything, and there are always issues around the efficacy of each policy. So you need to allow a little time for these things to, so that you can see the impact of it. And going into a currency, an e-currency that is going to be started, you have to also wait and see how it comes in and what happens. And then, you got to watch, and then again, the inflation is cooling off. And then you don't know what you will do that will exacerbate inflation immediately. So you just have to watch a little bit and have one thing at one stage at a time, and not have too many balls in the air.
Now, Prof, a lot of experience, we share anytime you speak to us like this. Some analysts have argued that we ought to also have learned from what happened in 2016, that the market fundamentals seems to have changed, and we ought to have changed the ball game to the way we work out. Now, do you think we should make any U-turn with regards to maybe our Forex policies or any of it in its totality?
Well, the thing is this: if we notice that at the back of that decision are many things that we're expecting to happen. Okay, we are trying to see how the commercial banks will deal with the currency situation of the Forex. We are watching, and then you could see more warnings going out from the CBN to the commercial banks. Get your act together. We can't go through all this forever. And then these infractions must come down, and you see some arrests being made. The EFCC is in looking, so there are many things going on, and we are watching. But I still don't foreclose the possibility that in future that the bank might consider how to widen the engagement of other stakeholders in Forex management.
Almost finally, now, Prof, let's project with what we have on ground. Analysts have come up to say we might even hit 600 naira maybe before we start to see a gradual decline. What's your projection? Do you think it could get that bad?
Well, do you know what will happen with the price of oil tomorrow? We don't know. Last year we saw the price of crude drop to $25 per barrel, and then we saw in America the shale oil were going at minus 30% dollar, where they had to pay people to carry the crude. So we don't know what will happen tomorrow, but I know that CBN is poised to push a lot of dollar into the circulation, if it hasn't done that already, because it was about to do it over the weekend. So normally when that happens, it will normalize the rates a little bit, and then we'll see how much more intervention is going to take place, because it's a managed float, and we can only watch. I don't think anybody is comfortable with such a disparity, wide disparity between the official and the parallel rates. But the jury is out on this. I've lost them completely. I've lost the voice. There's nothing. I can't hear anything anymore.
Prof, can you hear me? All right, Prof, can you, Professor Kenife? Prof, can you hear me? Wow. Okay.
The voice is gone.
Okay, Prof, go ahead. You are on.
Okay, but I don't know the question. What's the question?
Yes, I was just asking about how all of these vices affect investment drive into our country.
Two levels. Investment, watch the prices on offer on the securities, The investments watch the security situation. The investment watch the interest rates. They watch the inflation, which is completely out of order. But we're hoping that we will recover from that position. But it's a long way away from a single-digit inflation. So there are a lot of things that they're watching. They're also watching the political temperature. So we do know that the FDIs are not where they should be, and we know that the foreign portfolios are just they're quietly looking in. They haven't come in force, but they are quietly looking in, upticking a bit. We just hope that there's more confidence for investors to invest. But I think we should do more on the diaspora remittance. If you have diaspora remittance, it's over 11 times more than our FDI, and it's more than 7 times. It's 7 times more than our other revenue, other investments. So we should pay more attention to that, the diffusion of that, and how we strategically put that in.
It's a good way to leave it, Prof.
Maybe we could do a very big diaspora bond, and really make sure that it is targeted to the people who are remitting this money. Do 5 to 10 billion diaspora bond and see that these people actually get in. The last one that was done, I was in the House of Assembly. I mean, the diaspora there, we said they didn't even know when it was launched. The next they had was oversubscribed, so they were so angry. But now recovery has taken place in many countries abroad, and our guys, boys and girls, are ready to send some money in. So we should be better ready to receive those funds, and then add it into the Forex equation.
Of course, it's a good way to leave it. It's always interesting talking to you, Professor Kenife, an international report. You made it so simple. We got to really understand the issue. Macroeconomic public policy analyst, Professor Kenife. Thank you so very much for joining us on the show this afternoon. We really appreciate this.
Thank you. It's my pleasure.